What is going on, and welcome on into today's live stream. It is Monday, September 18, 2023. It's Fed week, guys, and we are looking right now at the probabilities for the Fed hike, which comes on Wednesday. And as of right now, there's nothing here. So we are not expecting a hike. We're expecting a continued pause, I guess. And the current target rate is where we see at the top of the screen, and then we are seeing a 99% chance that it stays in that exact same range. A minor 1% chance that we somehow see something, but of course that would be that'd be pretty insane, because this has been a pretty good indicator of what's going to happen. We've had a couple close ones, but when it's this skewed to one direction, we have not been wrong here. Where it gets more interesting is the November 1st meeting. This meeting, there's a little bit more of a chance that we see another 25 hike. And then beyond that, in December, there's like a 5% chance that we get two 25 hikes, or I guess a 50, but probably two 25s between now and then. Almost a 37% chance that we get at least 125 between now and the end of the year. And then a 58% chance that we stay where we are, whether that's nothing, or probably more likely than a hike and a cut. So seems like the Fed could be done, and we've been kind of saying that, I feel like, for a little bit, but it looks like, based off going out the next couple of months into the end of the year, it looks like the Fed could be done. And then, of course, will depend upon other things. Let's just check on Truflation really quick, see what this is looking at. Comes in at 2.56. This number we've been watching kind of close. Came down 2.48, back up to, whatever. It's starting to trend down again. Watching this is close is what I'm more interested in now, because this is kind of giving us a more of a real-time look at inflation and what we are really feeling, despite what the reported number of 3.7 actually is. If you were to go back in time, this number was higher. It was up, near 10% this time last year. So it gives you a better feel of what's actually happening. So we'll see. It's not like this is the CPI, but it's trying to do a good job of predicting it. If this can come under 2, like we've been saying, then I think that the chances of the Fed continuing to hike are probably like pretty much solidified, done. Because this is generally a little bit of ahead of what the CPIs come out with, some of their lags and whatnot in how they report the data. So if this goes sub 2, that's pretty telling to me, but it has not done so yet. So don't want to say that that's a guarantee, but that's kind of the general rule of thumb I'm going to be going off of, but we will see. What's going on, guys? Hope everyone's doing well. Millen, Philippa, Brandon, what's going on? Another day, no trade for me, not getting any steps. I did not do anything today. Oh, I took one trade today. It was small, and it ended up being a loss on Google. It kind of worked, but then I just cut it for a small loss. It was the breakout to these new highs right here, but kind of got a little push in my direction, was looking for 140 plus. There were some big sellers up at 140, couldn't break that, came back down, and then it's just been stuck since, which I'm not surprised. SPY is not really in a big range. I mean, as much as it kind of sucks to say, are we just waiting for like this next Fed thing, to come out? And once the Fed does their thing, we're like right on this support right here too, which I thought, like, okay, SPY, either you're going to give it to us to the downside today, or, bounce back. And it didn't really do anything. Like, we're holding on this 443.25 area. You broke it by like a touch, which is the lows of Thursday the 7th, so like 2 weeks ago, or a week and a half ago. So, I mean, as much as it sucks to say, I mean, there's not much news tomorrow. It's really just Wednesday afternoon, the Fed, which I'll have a stream for that. But outside of that, like, it seems like that's like the next thing. But, the market doesn't have to, give a shit about the Fed. It's going to do what it wants to do. It doesn't matter what news. Like, tomorrow could be a big move for all we know, So if I had to guess, like, I'd be skewed more towards the downside. If this level breaks, downside, other charts don't look great. But you can't assume right now. Also, if you're looking for a way to play the downside, I think IWM is your better bet. I mean, look how that chart's pretty weak. It's pushing low of the day as we speak, and you've got a little bit of a volume gap on the volume profile right here, down to about 179. So if you're looking for a downside, this is probably your better bet. Again, right, this is how it's been kind of going, right? One day, this is strong versus this, then this is strong versus that. And so they've been kind of flopping back and forth. There hasn't been a lot of consistency. So it's like, we'll see. swing opportunities in the wheat market though. I haven't taken a peek, but there's always something. There's always a bull market somewhere, right? Or I guess you could swing to the short side. XBI, pretty weak here, breaking a new low of the past couple months. Today, barely, but it did. Not much to talk about, I guess, there. The other thing I want to mention is the 10-year, so TLT to the moon. We'll see. You could go and we've talked about it for a while. Like, there's not much to do in my opinion. So, like, I have my positions on the bond stuff that I want to get. Nothing huge, nothing tiny, nothing huge. It's kind of just a nice size that I'm comfortable with. And I'm just going to hold on to it. No options that are necessarily. I'm not playing any option stuff, so there's no time that I have to really worry about specifically. But the 10-year kind of popped today a little bit, then it came back down. So it's currently technically down on the day, but it made a new high, technically, I guess. Is that even? I guess it opened up trading last night up over 4.4 briefly, and then it fell back down about 0.1%, if you will. But there's not much. Didn't really hold that move very much at all. So I don't even know if you want to call that really a true move. But we're in the channel. I mean, I would get a lot more excited about the TLT long if this channel broke, and then because essentially if yields are coming down, that means TLT is going up, so because of the inverse essentially. So that's what I'll be watching. The 10-year is what we're looking at here, is a good proxy. That's a good one just to get a good frame for yields in general, because there's the 2-year you can look at, you can look at the 10-year, you can look at the 30-year, 5-year, whatever you want to look at. But I like to just look at the 10-year to get a good top-down approach, I think, or I guess a middle-of-the-pack approach, is not top-down, middle-of-the-pack. The dollar DXY, not much here, pretty chill, still doing its thing of higher lows. Nothing I think to really talk too much about, and it's just slowly grinding. But if you look elsewhere, it's funny how oil is strong. Oil has been strong. It's a beast. Next. It's still not at the next resistance yet, so just letting it do its thing. Bitcoin has been strong. It's kind of strong, I guess. It's up 1% today. It's at 26.8. Okay, gold is up a little bit, up almost 0.5%. Silver's up 0.8. So silver and gold kind of bouncing off some supports. You're getting some action there. I mean, I really don't think you're going to see. It looks like silver and gold kind of are trying to hold up. They want to go, but the dollar has been too strong. If the dollar weakens, like, these are probably going to launch. I mean, who knows? But it seems like that's the way it is. They just have had multiple chances to come down and break these levels. They just haven't done it yet. Although silver, if it puts in like, a roll over here, that would get me very much interested in maybe even shorting silver, or playing something like that if it were to break down below that 22 level. I don't know. We'll see. But as of now, right, it's technically got higher lows. It's holding that 22 level pretty nice, and just let it do its thing for now. Yeah, I mean, XBI idea, like, it could be. It doesn't look great chart-wise, but if you are someone who wants to just buy biotechs, you think that they're cheap, and to be honest, I think that they are. Like, relatively speaking, if you were to look for, like, where is there a better deal? Like, are you going to go buy biotechs, or are you going to go buy, like, tech stocks or semiconductors? You're probably going to get better deals in biotechs, because this thing has been, like, their ETF has been this, versus semiconductors have been like this. Now they're consolidating, but it's like this is XBI's chart, and here's SMH, the semiconductor ETF. I mean, this thing is just kind of in this consolidation up here, but it just had a massive move. So you're probably gonna find better deals in bios. So if XBI breaks down, we've been talking about this before, right? If it breaks down, low 70s or whatever, it's probably not a terrible, DCA, dollar cost average, look, if that's what you're doing. Now, if you want to buy, is it the same approach as buying LABU? No, because of the time, or because of the decay factor on a 3x ETF, you got to be careful. It's not like you don't just buy the dip blindly necessarily on a 3x ETF. You could, but you have to understand that there's extra risk you're taking on. So for example, like, I deleveraged a little bit of my TMF a few weeks or months back, just in case, and it was a good idea at the time. Because I'm sitting here, I'm like, hey, I like the bond play the next couple of years. I don't know how long it's going to be. It could be 6 months, could be a 6-year period. I don't know. But I like that. But do you want to be like all tied to TMF, where like if it just kind of chops around for the next year or two, you're going to bleed out for a while because of the decay. Yeah, probably not the best play. So I got some of it out of that, and I have TLTW as well. So now I'm catching a dividend every month on this and getting my TLT exposure. It's a little bit of a safer play in my view. You know, you could just buy TLT, and I guess you could, and then sell covered calls there. But I just got this just to kind of split them up price wise in the portfolio. Made the most sense. So UNG. Natural gas fund. Well, let's look at I mean, this is just in consolidation mode, right? Let's look at natural. I want to look at natural. We can look at natural gas's chart, see how different they are, if they're very similar. So it's honestly like pretty lame. That's a pretty nasty consolidation. If I go to natural gas, it look the same? Pretty close. Yeah, they're very similar. Natural gas futures. I thought this was looking like it was going to break down. It ended up not doing it. So you can reconstruct this line to here maybe if you really want to, but I don't even know if I want to leave that line in there. But the view I have is like if we start to break down below on natural gas, this 250 or 245 area, start to break below that, that's not a great look at all. But need to get back over 3 for a break to the upside. This is not if you were to zoom out on like a weekly chart, like I don't love this pattern. Like I mean, if you get rid of the lines, go to even a monthly chart. I really don't like this as a bullish pattern unless you're just, I don't know enough about the natural gas markets to say like buy the dip because of XYZ, reasons. But if you look at this move, I see big legs down and I see us just in this little wedge back up. That's what I would suspect, unless proven otherwise, which would mean like natural gas probably recovers back up towards 4, and then it's like that invalidates that idea. Really, if it gets back above 3, that would start to invalidate that idea. But that's just like this is on a monthly chart, so I guess like big picture. But I don't know. That's my take on it. Go to the daily chart. It looks a little bit different. That's for sure, but it's just been really boring, right? Since early this year. 4-hour chart looks like inverse head and shoulders. No, I mean it right now, like on the shorter time frames, like it doesn't look, because if you kind of have this like this look right here, right? So it's not bad. It just needs to get back above 3. So get it above 3, and then that would be kind of a cleaner break. Technically, like you can call the neckline maybe something up towards 285. Somewhere in here is a better maybe neckline, but it's been months of just being in this consolidation from like 250 to 285. It hasn't really been able to break that consolidation zone. DCA into these, yeah. No, that's the way to do it. There's my dad texted me or talked to me today about this. What is it? It's QQQY or QQQ. Yeah. So check this out. This, I believe, QQQY is something to look into. I want to pull it up. I think this is, let's see. What is it called? NASDAQ 100 Enhanced Options Income ETF. Let's see if I can get more info on it. So check this out. What they do, from what I believe, I want to look into this a bit more. Let's see if I can figure out more about what they do. I believe what they do is they essentially sell puts on QQQ every day. So they sell a put at the end of the day, and then they have that essentially expire the next. Stupid freaking ad blocker. BS. Let's see if I can get rid of this shit. So I'll see if I get more information. Of course, like no information on it. Yeah. So they play a zero data E ETF. So they sell puts, and their game plan is to try to essentially cash flow daily. I believe that they'll just pay you monthly, I believe. But it's brand new. So it's something to watch. I'll keep it on my radar to see what's going on here and watch how and track it for a bit. But it got some more attention, I believe, today on CNBC. Again, that's kind of like what I think CNBC is cool for, like, you know, news, like, or getting, you know, cool shit like this. Is it telling you a stock to buy? No, I don't know how the reality of some of these income ETFs are going to do over the long term, because a lot of them are fairly new and they're really interesting, I think, from a cash flow perspective. But essentially, from what I was understanding, that they sell a zero data expiration put every single day, and then they just cash flow every day. Like they sell a far out the money 0 day put, and they just cash flow like a few bucks, a few bucks, a few bucks. But they do that every single day, and then compound that by the end of the year, and then, you know, returns, you know, whatever. Their I guess perfect case scenario is like a 60% yield. Was it what they said? I think what they were saying in a perfect scenario. But yeah, it's if everything were to work perfectly and they had no crazy dumps on a, you know, CPI report or a black swan event, you know, that kind of screws you, right? So I don't know, it's something to watch. I'll keep it on the radar, but thought it was interesting at least to bring up. Oh, natty gas. XBI support levels. Let's pull it up. So some of these charts looking a little weak here into the close. We got 15 minutes-ish. Yeah, big level on XBI, I think we're looking at next, is down towards, it's kind of at like a decent spot here in the volume profile. Will start to support that. Will it? Let's see. Nah, it's kind of actually breaking down below some levels in the volume profile. Yeah, the next spot of a bounce was 72.60-ish. But yeah, it's breaking out. It doesn't look good. It looks like that's going to be in the cards here. I think that's not a terrible dollar cost average spot. Of course, it could go lower, right? But from like if you want to just buy something and hold it for a while, like that's not from a technical perspective, it's better than buying it when it's up, right? So you're buying it when it's down, at least at support. It could totally break support. But if your time horizon is years and not days and weeks, and you don't really give a shit. I want to pull up some of these charts right now. So Tesla looks weak into the close. Let's see. Yeah, I mean, not the... Sure, I mean, Tesla's daily chart looks... It's breaking the structure that it had. It looked like last week it was going to send it up into this gap right here, this white box. Just couldn't do it. So we'll wait on that one, it looks like, I guess. But next spot to watch on Tesla is, I think, down to fill this little gap right here, down to about like 256-ish, 257. But that could be, I mean, if you wanted to, if you had the nuts and the balls to swing that one, you know, doesn't look like a terrible idea. The problem is, like, how do you play that? Swinging shares, I think, is much better than playing options. You know, you probably put a stop loss. I'd say something like that as your stop loss. 271.50 as your stop. And then your take profit is here. Is that going to get you a decent risk reward? I don't know. Let's see. That's high of day today. Yeah, it's actually at 1.5. It's not bad. It's 1.5 to 1. So on shares, yeah, it's a pretty good risk reward. On options, you know, it's a different game, different ball game for sure. But on shares, and there's the inverse ETFs. You could also short. You can, yeah, there's other ways to short it, but it's not a bad look. Why you have a break in higher low structure at that the break level, which is essentially today's high versus yesterday or Friday's low. It's right here, 271.50 roughly. Gets back above that, you get out. And then take profits are down once this gap gets filled towards 257, 256.50, something along those lines, you know. Something that's an idea. Not something I would absolutely not do this with options, just nature of it. Having to pick Friday expiration with a Fed meeting in there and all that stuff. But from a chart shares perspective, it doesn't look great. No, I'm talking about natural gas. Yeah, Boyle. Boyle, man. Natural gas is like, I don't know. I wish I could have tracked, because I've made those plays in different accounts and also when I was being a dumbass. So I wish I could track how many times I have traded it in any way and won or lost. If I was to go back and look at it, I think it would probably be like out of, let's say, 10 attempts. I don't know if I've traded that many times in either Boyle or futures or just different ways to play at natural gas. I think I've probably won maybe once out of a total of 10 times of trying just natural gas. Well, when you think about the 0 day puts, like, it's not like like 0 day expiration options, like those are the one, like the decay is insane on those, right? The only problem is, like, I don't know, like what kind of premiums are you getting? Like, let's just go look in Robinhood. If I go to QQQ inside of here and I go to like the option chain, let's see. If I was to sell a put on QQQ, oh, they have this chance to profit. It's kind of cool. Gives you a % chance of profiting on the position. That's kind of cool. Let's say if I was to sell like a tomorrow expiration, so, you know, one more day from now, you know, and sell a put, like, you know, I go to 365 and I get paid 9 cents. I go to 364 and I get paid 6 cents. From where it's at, 370 to 364, you know, on QQQ, how big of a move is that? It's pretty decent, actually. QQQ would have to, but that could easily happen though in a day. Like, no problem. QQQ would have to drop about 1.7% for me to be in the money on that. So, you know, but okay, like, I don't know, like, if you do the math on that, like, what does that actually like return? Like, it's essentially a situation where, like, you could, from just selling one put, you know, you could make, let's just say, $2 a day. I don't know, if you sold them for 2 cents. You know, does $2 a day every day consistently amount? What kind of yield is that going to provide you? I don't know on how much. I don't know. Is that because we sometimes talk about some of these covered call ETFs, and we're like, well, or you get 100 shares of a stock and you can sell, you know, a covered call out the money for $10, 10 cents, $10, and you can do that, you know, either once a month. Let's say you do it once a month. You know, that's $120 a year. You're going to extra cash flow on that position. That's not bad when you consider that maybe you're only in a couple $1,000s, and then you make an extra, in terms of like cash flowing from covered calls, an extra 120 in like dividends and cash flow per year on a position that you want to hold anyway. It's kind of cool. But how that plays out into this, I want to look into it in more depth. But the idea gets me interested for sure. Up 1,000 train Boyle. Hey, that's good. I mean, I just have not had a good handle on it. Nat gas. Maybe it's also because back when I haven't traded in a while. Back when I had like really no clean sense of strategy on it. So I was kind of just doing whatever. Now it's got to fit some criteria for me to take a position on it. Where they sell, options had decayed all day. Yeah, apparently I thought that, well, they could sell at the open and then just at the end of the day they expire, or they could sell the night before, or they could sell why would they do that though? Why would they sell? If they were trying to operate for decay, with less risk, why would you sell a covered or a put at the close and then the next day have it expire when you have overnight risk? That makes no sense to me. When you could just wake up the next day, sell at the open, and then let that thing expire at the close, right? Wouldn't you do that? unless they can't day trade. I don't know if they have to avoid day trade rules or whatever. Maybe that's part of it. I don't know, because you would think, right? Because how many times do we get these like crazy gap downs or gap ups? Like overnight, something crazy could happen that it's not during market hours, and the market will just react the next day, and then we can have a massive 3% gap down day on QQQ, and now that position gets screwed. Where, you could have woken up that day, seen the news, oh shit, puts are going to be juicy, sell a put out the money at the open, get paid a few extra bucks. Maybe it goes there, right? But that's like, talking about like a 5% down day. Or chances are maybe it doesn't go any, it kind of bounces back or whatever, and you end up, it's just free money. I don't know. That's what doesn't make sense. You would think it would be at the open, but unless there's rules about day trades and restrictions there, then I don't know. One thing that's funny though, not to kind of off track, but it's just a pretty boring, to be honest, it's kind of a boring day. I had recently this past football season, so 3 weeks ago, I guess, or whatever, whenever the first week of college football started. Or no, it was the second week. Yeah, so really it's only been 2 weeks. I had $40 in a Bitcoin wallet that I threw into this sports betting account, which I have a previous bad history with sports betting, but I think my mindset's changed in a big way. Not that I'm going to be doing that like as a big thing, but I just, just for funds, like I think it's kind of cool to just throw a few bucks at some stuff that you think is going to happen. Blah, blah, blah. I had 8 in a row. I have hit 8 in a row. I have not lost a single sports bet this year. Not a single one. Now, am I doubling the money? No, but I went from like $40 to like nearly 400 in 8 bets. 2 of those were parlays, and the rest were just straight up bets. Some of them were prop bets for Thursday night games. Some of them were just unders on games. Some of them were the parlay this past week was Penn State to cover 14-point spread against Illinois, and then Colorado State to cover 23-point spread against Colorado. Essentially taking the exact same concepts, like on the Colorado side, the exact same concept when it comes to the market and hype and like fear and greed, and just applying it to that. I'm like, Colorado State is getting 23 points. Now they got to go on the road, Deion, the hype around Colorado. Sure, they got some good guys. But Colorado State, you're telling me that they're going to lose by 24 or more. I don't know. It seemed like that was a lot, and that's why I played it. So I parlayed those two, and that was a nice payout. So somehow, hey, it's working out. What I am curious about, though, is I do want to see what the current spreads are and the current lines are for Colorado's next game, which this is going to be interesting because they play Oregon. Because that's where this is like a situation where it's like, in my view, it's like the same thing as the exact same thing as the market. You have the team that has the most hype of any team in college football. Now you can essentially bet against. People are buying their merch. They will bet on this team like out the ass because they don't care. They'll just keep throwing money at this thing. So that's why it's like you have the ultimate, you have the ultimate fade the crowd. So Colorado's 19 and they play Oregon, who's number 10. Well, Oregon's a 20. I wouldn't touch that, but Oregon's a 21-point favorite. I think Oregon freaking smacks the shit out of them this weekend, but and the run ends. But 21 points is a lot. I don't know, but so it's this is, I think people are catching on now. But last game I thought was pretty good. But it's the same thing, right? You get hype on a team, boom. I think that I don't know. Something I've been doing in the back. I took money out though. I reset the account back to $100, and so I have past history with being a dumbass when it comes to sports betting. But I thought it was cool that, hey, I'm like 8 in a row is like unheard of in my opinion. Usually, you maybe can hit 5 out of 6 or 5 out of 10, 5 out of 8, maybe 6 out of 8 on a good streak. But 8 out of 8 is nuts. Small account challenge. No, yeah, it's not something that I really would talk about too much. But it's the same concept. I think it applies to that. when I got into trouble with that stuff, because you could operate in theory, right? You can operate a strategy where the risk reward is kind of not in your favor though on that, unless you're playing parlays, but which even that is, then you're adding more risk. Not risk, you're adding, the probabilities are so low. So you don't really have much of an edge, to be honest. So you kind of have to have this like subjective edge almost on it, which, you get into trouble very easily. So it's not like a long-term thing. I think I took my profits and will likely, I have $100. I left $100 in the account, and once that bleeds out, I'll just be done. If it does, maybe it doesn't bleed out. ARK's down 2. Yeah, ARK's down a good amount today. Yes, it is. I want to sell covered calls here, but I just, would prefer to do that when the thing is up, because we know how ARK could move off of a snapback in the market. So I don't want to mess with it really. I'm willing to hold ARK as my tech exposure, my growth exposure. So I'm not touching that. But yeah, back in this portfolio, because a lot of options expired on Friday. We got some covered calls to sell here. Anything that's worth selling covered calls? Not really. AGQ is one that maybe, but you got to go out to next month expiration, I believe. Yeah, you got to go out to October 20th. It's over 30 days away to sell a call. You could do it, right? But to sell like the 33 strike, it's 20 cents. Is that worth 20 cents, $20 on AGQ, knowing how violently volatile silver could be? You get one of these gap ups. If silver snaps back and gets up to here, then I'll sell one. But if it does not, like if it could just, I don't know, it's not worth it in my opinion, because silver can move so fast in a matter of like a week or two, or 3 days. The thing went from, 26 to 30, $4 of a move in no time. So I'd prefer to sell a covered call when the thing is up a lot, a couple percent. It's up almost 2% today. Good, but nothing great. So my view, not much to do there in the portfolio today. No, I mean, stuff was up, some stuff was up, some was down, but like not much to do there. Not much. We'll see though. Hopefully we get something to sell covered calls on. We'll try. We can go on to JEPI and sell one out. Let's see. JEPI options. I'm going to go here. Sell a call next month expiration. Probably go to like the 58 strike, and just toss a $5 line in the sand here. I'll just leave this one for like the next, week or whatever, or next until it expires. I'll leave that one in there. So we'll have that out there. Well, market's closed now, but I'm just putting these in there for tomorrow and for the next couple of days. But yeah, that's it. Other than that, I'm not going to touch anything. I was thinking about getting rid of SOXL, SOXL. I will do that if SMH breaks down under the level that it has been trying to hold, which it has not done. So SMH needs to break down under 143. So I'm not going to do that. Just free up a few bucks of buying power is all it would do, just to confirm that or lock that in. If it holds this level though and rallies back up, I'm just going to leave the last little bit I have. I only got like 20 shares left, so I had sold all of the rest. But with that said, kind of a chill day, kind of boring day to be honest. Kind of fits the same, bill of what we've been seeing. I'll be back on Wednesday for a stream. If there was a place, you still could buy these options after the close. If there was a place that I would say, like like the shorts here, it's probably IWM, way weaker, like way how weak that is, closing at low of the day. Only problem is that you're playing overnight. You have no idea what's going to happen tomorrow. But if tomorrow is a red day and the market does pull back a little further before this Fed meeting kind of crap, or this announcement, the Fed announcement, I think this is a higher probability move on IWM. So maybe there's something there to be had. You could even maybe go and say, I guess you could do this too. Let's look at this. There's probably something to play off of with a spread. Let's see if we can go in here, go to options, go to builder. Let's go to a call credit spread builder and see what we can do. This is super small, but there you go. So where is it at? Where is IWM? You would want to see it below 185 by 186. That's where I'd look for. And I would go 2 days, September 20th. That's 12 cents. It's like, it's not worth really 12 cents. It's $12. I mean, you could do it, but you're going to get paid 12 cents, and then your downside is buying this thing back for $1. So is that risk reward worth it to you? Probably not, in my opinion. But you never know. It could still be good. It could still bleed out and pan out nicely. Just funny look at how low volume is today on IWM, DIA, low volume, QQQ, very low volume there. Just no volume today. SPY, look at SPY. SPY, today's volume, 45 million. Now, Friday was with monthly expiration, so you had 111 million. Back on Wednesday of last week, you had 60 million. Tuesday the 5th, 55 million. This is one of the lower volume days. You got to go back to Monday, August 14th to see a day that was even close to this volume. The day that had a lower volume than today was July 3rd, the half day, or the day before 4th of July. So very low volume day on SPY. Not much. But with that said, I'm going to wrap things up for today. We'll be back on Wednesday. We'll have the Powell stuff. We'll have his press conference, the reaction to that. And we'll see if the market does give us better direction or gives us something to do. In the meantime, we chill. We chill and just let things do their thing. So thanks so much for watching, guys. I'll see you.